What's up traders? Doji candlestick secret. Doji candlestick is one of the most reliable price action pattern trusted by many traders. So today in this video, I'll tell you everything you need to know about Doji candlestick. At the end of this video, you'll learn what is Doji and what are the various types of Doji, and also how to predict the next market movement based on Doji with examples. So I'll give you a clear idea of how to find signals based on various types of Doji formed in a different area of the price action. So this video is going to be super important and valuable for you, because the information I'll be releasing today you will not find anywhere. People don't release this information for free. So make sure you stick till the end of this video and watch this video over and over again if you don't understand anything. If you have any question, leave a comment below. I will get back to you straight away. If you're new to the channel, hit that red subscribe button, because there is a lot of content in this channel already available, and also I'll be releasing almost every day. Press the bell notification button so that you don't miss out any of this content that I will be releasing, including the live analysis and strategies. That's it. Let's get it. Before I begin, let me debunk the misconception. The misconception is that Doji is a sign of reversal. Doji is not only a sign of reversal. Doji can be sign of reversal as well as a sign of continuation based on what kind of Doji is formed and where it is formed in the chart. So let me give you an example. Say for example, look at this chart here. So what you see here, first look at this here. This is a Doji. Okay, now, and what after this Doji, what happened? The price straight reverse. So this Doji is give you a reversal signal. Now at the same time, look at here, there is quite a few Doji. So all of these are Dojis. Okay, but this Doji basically is continuing the price. So this Doji is giving you a continuation signal. So that means where it is forming and what kind of Doji is forming is determining either this price will reverse or it will continue. So in this video, you learn how to determine a Doji is a sign of reversal or a sign of continuation. So let's start with first basics. First, learn what is Doji. Now, Doji candlestick is basically defined as a candle that has a narrow and smaller body. Okay, so it could be a long wick or short wick with a narrow body. Narrow body means, say for example, in this example, what you see, this is a textbook Doji. Now what happened here? The price opened here. Okay, after that what happened? The buyers pushed the price up, and then at certain point seller came back and they pushed the price down. Okay, even below this low, and then again buyers came back, and at the end of the day or at the end of this trading period, either what time frame you are looking, the price closed almost the same place where it has started. So in that case, this candlestick is formed, which is called Doji. Now this is a textbook Doji. Remember, you may not find always like this. There will be a lot of variations. You have to be aware of it. Okay, so the candle could be something like this, or maybe a little bit of body. Okay, not maybe exactly like this, a little bit of body, doesn't matter. It could be like this, it could be somewhere here, or maybe here, or maybe here. So wherever it is forming, the concept is that when the body is narrow, the wick is longer, and that is called doji. Now we'll learn various types of doji, and after that I will show you in chart how you can predict the market movement based on this doji. Okay, so let's learn the types of doji. So the first type that we will learn about doji is called the neutral or standard doji, the textbook doji. It looks like a sign, okay, plus sign. That means the body and the wick is almost equal and height, so it looks like a plus sign. That we can say a textbook or standard doji. The second types of doji that we learn is called long-legged doji. So what does it mean? First of all, try to understand from the definition. So long-legged doji means, so there will have a long wick with a narrow body. That is called the long-legged doji. So the definition is longer upper and lower wick with body in the middle. Now this body can be aligned or it can be smaller body, but the condition is it has to have a longer wick at the top and at the bottom. So that is what we can say long-legged doji. The third kind of doji is called dragonfly doji. So the dragonfly doji is what you can say which has a body at the top and a long wick at the bottom. That is what we can say dragonfly doji. So what does this doji means? It means that rejection of lower price. So what happened? Market opened here and then the sellers immediately came. They pushed the price well below. At some point the buyers again pushed the price high and closed where it has almost started. That is called a dragonfly doji. Now this is a rejection of lower price. Now most people will tell you that when you see a dragonfly doji, it's a buy signal. That's not right. Dragonfly doji can be a buy signal or can be a sell signal. I will show you later in this video how you can find out either it is a buy or sell. Okay, the fourth types of doji that we will be learning is called the gravestone doji. Now the gravestone doji is that it will have a long wick at the top and the body at the bottom. So what it means that the buyers, as soon as the market opens or the candle opens, the buyers came, they pushed the price well above, and the sellers came back, they pushed the price at the bottom, and before just closing the candle, the price almost closed at the same place, so which is called the gravestone doji. Now I sometimes find difficult to differentiate between a dragonfly and a gravestone doji. So how I remember is, say dragonfly has a weak body at the top, so I remember fly with the flying in the sky, so sky in the top, so I remember the body in the top. And gravestone, I remember the stone that is found on the ground, so which is bottom, and that's how I remember. Just my technique. If you find it difficult to remember, you can use this technique as well. Now let's see in the real chart how we can identify this doji to find the proper signal. Okay, so let's learn first how we can predict continuation based on doji. Now first thing you need to remember is that you need to see a reversal pattern in the market, so reversal pattern or a consolidation, and then break out of this reversal or continuation and then form a doji, which means that this price is continue to fall or continue to rise. Let me clarify. Say for example, a reversal pattern could be a head and shoulder pattern or a double top, double bottom, whatever, or a V-shaped movement. So let me give you an example. I will show you in chart as well. So say for example a double top formation. This is a reversal pattern, right? And then the price broke to the downside with a strong, say, red candle. Now after this, when you see a doji with a lower high, remember that can be a signal of continuation. This is not a reversal. That is very, very important. Or maybe you can see a consolidation like this, okay, a consolidation and then breakout of the consolidation with a long red candle. Now after this long red candle, if you see a doji with a lower high, this doji could mean continuation of this downward price. Okay, now let's see first what I mean by this in the chart. Now look at this one first of all. Okay, be attentive. It is super important. If you understand this, then your trading will change. Okay, now look at this one here. Say what you see here. See, this is a head and shoulder pattern. Forget about everything in the chart, just focus on this part here. Now when the price came here, it formed this head and shoulder pattern. It's a clear head and shoulder pattern. Okay, this is the head, left shoulder, right shoulder, right? Now after this head and shoulder pattern, what happened? The price broke with this long red candle. This is a breakout from this head and shoulder pattern, break this neckline, right? So this is the neckline, is completely clearly broken. Now after this breakout, what happened? Look, after this red candle, there is a long legged doji is formed. So when you see a reversal pattern like this one, head and shoulder is a reversal pattern followed by a strong breakout followed by a doji. Now this doji, remember, when you see this doji in this case, must create a lower high and lower low. What does it mean? It means that if this doji couldn't break this low, that means it stops here, then we will not take this signal. This may be reversal. Remember, it has to create a lower low and lower high. In that case, this doji can give you a signal of continuation. Remember, this is not science. There will be a lot of trade you will find it will reverse from here. So then you might say, then how can you justify the accuracy? This is the trading. Most cases you will find this one is working. And if you take this trade, for example, with a stop loss above this doji, now see how many times of profit you can make from here. Now if you take this trade 1, 2, 3, 4, 5, 6 time profit you can make. Now if you have a strategy is 1 to 5, even 1 to 3, then over the long term what will happen, even if you win 50% of the time, then you will have a lot of profit. And that's how traders make money. You have to find a signal that is high probability and keep your risk to reward high, and that's how you can become a profitable trader. So this is the one example. Now let's look at another one. Now look at this one here. In this one, I have shown you a false signal as well, the one that I just discussed. Now first see the valid signal. Look at this one here. See, the price came here and then created this consolidation and also triple top. Okay, after this triple top, what happened? The price broke to the downside, broke all this level of support. Okay, after this breaking of the level of support, what happened? See, after this back to back 3 candle, when this candle closed here, that means it has broken this level of support. Now after this, what happened? Look at this. This one is a long legged doji. Okay, so the body is like this. It's a doji. May not be always like this, as I told you. There will be always variation. So after this long legged doji, when you see as I told you, a reversal pattern, breakout from a reversal pattern followed by a doji with a lower high, when it is breaking to the downside, then lower high and lower low, that is a signal of continuation. And after that, what happened? The price dropped a lot, based on, if you trade it from here with a stop loss, narrow stop loss, again you can gain almost 5 to 6 times profit. Okay, now look at this same situation, false signal. See, there is a, it's not showing here, there is a double top formation here, and then what happened? The price broke to the downside. Okay, after this breakout, what happened? You found a doji here. Okay, this doji. Now why we are saying that this is a false signal? Look at this. This doji could not break the previous low. That means it is within the range. And after what happened? The price rose up. Now if you trade this one based on this, above this stop loss, above this high, your stop loss will be hit. So you need to make sure that the doji is breaking the previous low and creating a higher, lower high and lower low. So then it could be a high probability signal. But if it cannot break the low, then it could be a false signal. Better avoiding this one. So that is one example. Let's see more examples. Now let's see this example for buyers or the bull market. Now what happened on this one? Look, there is a clear reversal pattern. Okay, clear double bottom. After the double bottom, what happened? The price aggressively broke to the upside. Now after this break, what you will be doing is basically you will be waiting for a doji. Now you see there is a doji here as well. Okay, this is a big body, but still we can consider a doji, but we will not say this is a signal, because the condition is there has to be a breakout and then there has to be a doji. But this candle is basically a breakout candle from this, you know, double bottom, and then broke the neckline. After this, what happened? After this green candle, we see a doji formed here. Now this doji is basically what kind of doji? It's a gravestone doji. As I told you that you don't know what kind of doji is forming, but you have to find higher. So because this is a bull market, in that case you have to make sure that this doji is creating a higher high and higher low. When it is falling, you have to make sure that this doji is creating a lower high and lower low, and then it can be continuation. When it is a bull market, you have to make sure that the doji is creating a higher high and higher low. Then what happened after this doji? The price again, you know, rise, the rallies to the upside, and it could be a big trade if you properly manage your risk. So that's how you need to predict the continuation of the market based on doji. Now let's learn what kind of doji will give you reversal signal. Learn how to predict reversal based on doji. Now a dragonfly doji or a gravestone doji on a level of support, resistance, or on a trend line may mean reversal. So what do I mean by this? Say for example, if you see a market like this, a ranging market or even a trending market, what you see that there is a support here and there is a resistance here, right? So this is the resistance. Now if you see a doji here, either it is a dragonfly doji or a gravestone doji, as long as it is on a support, this means that the price may rise. Okay, at the same time, if you see the same thing, a gravestone doji or a dragonfly doji on a level of resistance, it means that the price may reverse. That means because they are in a resistance, the price may fall down. Okay, now let's see in chart what do I mean by this. Now let's see first this example. Okay, now look at this one. This is USD CAD. What we see that this is important level of support here, so the price bounced back from here. Later what happened? This level is broken. Okay, and the price came back to the same level here, and quite a few candle back to back rejected, so acted as a resistance. The price came here again and then went back to the same level. After going back to the same level, what we have seen, a long legged doji is formed. Now when this long legged doji, not only one, two doji is formed, when it is formed, what we have seen that this is basically a level of resistance. Okay, so this is formed in a level of resistance. When it is formed in a level of resistance, what we have seen that later the price dropped. Okay, so this doji can give you a reversal signal because they're formed in an important area of value or on a resistance. Now let's see another example. Now see this example here. So this is a support. Okay, look at this here. In this market, the price came here, acted as a support, and then went up, again came back below, acted as a support, and then went up. Now when, first of all, look at here, when the price came back here, because it has acted as a support in the past, when the price came back here, again the buyers are active in this zone. And then what happened, we see that there is one formed gravestone doji, there is another one is a long legged doji, and there is, so there are back to back two doji, one is long legged and one is gravestone doji. And after that, what happened, the price rallied a lot to the moon, and from there the price came back again after a couple of days on the same place, because this twice it has acted as a support. Again the buyers came back here, and what we have seen that back to back two, one, this red one we can consider it as a dragonfly doji, and this one we can consider as a gravestone doji according to definition. So on the support, what we have seen that back to back two doji, two kind of doji, but on a level of support. So when you see them on a level of support, that means this is a sign of reversal. So that is how you will determine either the doji is a continuation or is a sign of reversal, not blindly saying that doji is a sign of reversal. So that's all. I think I sincerely believe that this video was helpful to you. You have learned a lot. If you have any question, leave a comment below, and also make sure you subscribe. I'll release a complete strategy in the next video based on double doji candlestick pattern. Stay tuned. Till then, thank you. See you soon.